Well, I'm already live streaming. Hopefully they show up. Is Lisa here? Lisa? She's live streaming. Carlos, hopefully be here. Evan? Tara? Edward? Arthur's not here. Brianna? William? Bryce? I think he's the one that dropped it today. Bryce? Morgan? Morgan, are you getting this accounting?
Pretty well. Not perfect by any means, but
You ever gotten frustrated, have you?
oh, never.
How about you, William? Evan, you doing okay?
So,
See, Joy, not here. Eva, international student. Sydney, never been here. Bailey Smith. See, Christopher and Miranda. Christopher, Miranda helping you?
Yeah.
Good. Figured she was picking it up a little faster than you, but you'll get it. All right, folks. Hey, gentlemen, how are you?
good, yep.
We were just waiting for you.
Oh, thank you.
Are the ladies behind you?
They're coming in. Not there, not. I thought they were here already.
They're usually out front, but I guess these two are not. Arthur, are you getting this accounting?
What?
Are you getting the accounting? Understanding some of it?
No, with the signature.
Yeah. Carlos, how about you? You,
Not your card,
I mean, Carlos,
These are.
he's Arthur, but you were talking for him.
Huh.
Arthur, are you getting this accounting?
Yeah. Yeah.
Okay.
I mean,
You all go to tennis practice just before class? Or?
yeah.
Is this the third night or the fourth night? Third night or fourth? Third. I guess, yeah. We're supposed to have 15 of you here. 9 of you show up. One's live streaming, I know of. One that was in National Guard had to drop out. A couple I've never heard from. so forth, so. And we're going to go ahead and look at problem 2.1 at the end of chapter 2, of course. Now, chapter 1, we practice the accounting equation, and we practice the statements, balance sheet, income statement, and capital statement. All right. In chapter 2, we just really want to learn debits and credits. And in chapter 2, we want to make journal entries. And in chapter 2, we want to do an unadjusted trial balance. So here is the plan, folks. We've got to have a long evening, that's for sure. And I've had a sinus infection to start to leave me, so we got to make a long class meeting and get a lot done. Finish chapter 2 and do a lot on chapter 3 and have a test next week. So that's where we are. Now, on Cengage, how many of you have chapter 1 finished on Cengage? Brenda, I know you do. Carlos?
Oh, yeah.
Yeah, okay. All right. My day class had to have chapter 1 finished by Monday. Don't care what the date is, it says the 6th. Chapter 2, how many of you have chapter 2 finished? 1, 2, 3?
Oh.
Chapter 2? Okay. Cengage? All right. As long as you have that finished by Friday, you're okay. So if you don't have it tonight, you've got a couple more days. Even Saturday, I won't be able to check it really until Monday.
It's for the 6th.
And it doesn't matter. No. Ignore.
What?
Ignore the 6th. Remember, ignore means don't worry about that date. Listen to the new date. Okay. The 6th, you should have chapter 1 done, no doubt. Should be done tonight. Chapter 2, I'm giving you an extension from the 6th till Friday, which is what? All right, the 7th. However, I probably won't be able to check it on the 7th. I won't be able to check it until the 10th. That's Monday. Now, if we're going to have a test on chapter 1, 2, 3 next week, I'd expect you to have all 3 chapters done by next week. Hopefully, if tonight is the 5th, next Wednesday is the 12th, right? Now, if you don't have chapter 3 finished by the 12th, I'll give you that weekend, you can finish chapter 3 after the 10th. So even that, it's not due somewhere around the 16th. But that's to give all of you a chance. You've got books late, Cengage late. Now, one student, sorry to drop out here today, but he got a work study check. He got his book, he got his Cengage, and his book for $120. But he got the ebook, which is okay. Whereas the bookstore would have been $208 or whatever they charge. So
The book and Cengage were 120.
the what?
The book and Cengage were how much?
The book and Cengage together was $208. All right, but if y'all got a loaner book and you got Cengage for $100, so you saved $108 a piece. So I agree that you should get books as cheap as you can get them. If you pay the full price down here at the bookstore, you almost have to rob a bank. Or have at least $1,000 to get 4 books. And when they're 300 some a piece, sometimes they're just 3 books. So that don't sound like Eagle or Will unless they change the voices to male voices. What?
That sounded a little bit
A
deeper
little
than
bit
woman's
deeper,
voice.
But anyway, I think everybody's okay with books. That's good. I think Eva has a book. Eva has a book. And I guess Billy shared her book. Hopefully, you can find Cengage. All right. I taught up here in 1979, and I covered 14 chapters a semester. That was 28 chapters in the book at the time. But since then, I've cut it down to about 10 chapters a semester. I weeded out chapters that you don't need or you'll get in another course. And we've got the most important 20 chapters. And all other accounting instructors, the last 10 years have followed the same thing, 10 chapters, whether part-time or Mr. Imel. Have any of you met Mr. Imel yet? He's the other accounting instructor, and he just came aboard this fall. Mr. Imel was one of my students. He was older at the time. He went on and got his accounting degree in 2 years, then 4 years, then master's, almost his doctorate. And he's worked up in Northern Virginia. I think Northern Virginia Community College. They only have 83,000 students. All right. They have more accounting majors than Bluefield State has at home. They're in Rome. That's where he came from. And it took about $30,000 cut to come here. Because he lives in Buchanan County, he could drive to Buchanan County. He had to have 2 houses when he was up there. Plus, he can be to work here, even from Buchanan County, around Grundy. He can be to work probably an hour and a half. It took him 2 hours to go 20 miles up there. So that's the reasons he came back. Come in, ladies.
You thought we weren't coming.
You what?
And you thought we're not coming.
Had you thought about it?
Oh, yeah?
Have you thought about not coming?
No.
Okay, good. Now that we have all of our international countries represented, we can call the United Nations to order. Okay? And get started with accounting. But anyway, Mr. Imel, he's going to do good here. He'll be here long after I'm gone. And he's going to take over some of the courses I teach when I do leave. Okay? But anyway, we covered 10 chapters. We have to cover 10 chapters this semester. Now or later. And we've used 3 of our knives out of 15. And next week we'll use 4 of our knives out of 15. 4 out of 15 is 25 to 30% of the class. It's already done. We're spending on 3 chapters. But it's important you get chapter 2 and 3. That's the meat of accounting. It'll go with you in all your other accounting courses, whatever accounting course you have to take. Your health service management major, the only thing you have to take probably is managerial accounting. And same with marketing and management, managerial accounting. 2 or 3 accounting majors in here. You well, some of you love it so much you may switch, but and if you hate it enough, you may also switch, you know, if you're accounting major. But accounting is not an easy course. To major in accounting, I would like to think you have above average IQ. Okay? And but there's jobs out there in accounting. Very good job. All right. Now, I know in the health service field, if you can't make it in the health service field with your degree, go to Southern Exposure. You all know what I'm talking about, though. Y'all know what I'm talking about?
The story is the first day.
Yeah, so after the first day. Anyway, I hope she's going down south somewhere, got a job somewhere else. And anyhow, I didn't tell her working there. I said, that's so you can never put on resumes. And I think one of our professors said, go for it. I worked at it. Well, that's not good advice, telling her to work in a place that does not have a future. we want to think the older we get, the more we move up in our company, right? But the older she gets, she'll move down in her company. Okay. All right, let's look at, problem 2.1, and, I've loaned so many pages out of my book, I hope I have the, problem. All right, now, we put these in T accounts. I wish I'd have had you put them in journal entry form. So let's just run through them real quick, see if you understand the debits and the credits. I'm not worried about explanations, I'm not worried about the T's right now. But anyway, we transferred cash from a personal bank account, to be used for the business. William, how about that one?
There's that, credit 36,000 to cash and debit 36,000 to capital.
That's close. If you'll reverse it.
Debit, cash, and credit
All
capital.
right, see, the cash is going into the business account. It's coming in, that's why it's a debit. We're not doing his personal account. Sure, on his personal account, it's a credit, it's minus to his checkbook. But for the business, it is a debit and capital is a credit. Debit increases cash, credit increases capital. And Morgan, how about, B part? We paid October rent for office, and workroom, $2,400.
Debit, cash for 2,400, and credit rent expenses.
All right, Morgan? You got that reverse on your mind, just like William does. Okay? All right, reverse that for me. We paid rent. Rent expense is the debit. We want to increase it. We want to decrease our cash.
So the credit account for 2,400, and debit.
Exactly. All right, purchased an automobile for, 32,000. We paid 78 down. Evan, that's compound interest. What would you debit?
Is it a debit to accounts payable
All right, keep going.
and a debit to accounts payable,
Keep going.
not a credit to cash?
Totally wrong. All right. Reverse it.
Debit to cash?
No, debit to automobile, which you didn't have. Now, credit cash, and then credit notes payable. All right, you had some of the accounts right. All right, it says, and gave me notes payable. Okay, we purchased and used automobile. So what's the business get? Automobile. What do you do to increase that? Automobile. What is the business giving up? Cash, you credit cash. And you also credit notes payable. All right. Okay, Eva, we purchased office and computer equipment on account for 9,000. Give it a try. What are we getting? What are we getting? What's coming into the business? Like, what? What?
What was the question?
Okay. First office computer equipment on account. You have an e-book on there? You have an e-book? You have a book? Okay. I thought you had a book. Well, sure, let's see what to do here. That's so much started. Y'all have one, yeah. Yeah, but just set it aside. All right. Do you not have a book? Anyway, these guys have.
Yeah, but I feel like no one relates to council or I understood that we only have.
You're close to see.
We had something.
So, this is. Look, I am reserve library, just like those.
Yep, I mean, we use this one. But comes to the other one, all of us, so that's the four of you.
Now, once already got sand cakes, right?
Yeah.
But one, they cost 100.
Yeah.
I had tasted it, I sand cakes, one sand cake for 100. He looked for $24. Yeah. We just ordered it back. So if we go back on sand cakes, he looked for $20, that'd be great.
The course, so you'll see it right there, and you try on it. Sign on it, right beside the course.
$20, but
There's
I said, okay. Miranda, come on over here and sit.
What?
She does. So she got the book. So with their C-engaged card, they get to blow on holidays. That's what I said. And you got a different code too, right?
Yeah, so I'm gonna just say-
Go to the end of championship. Look at the eight columns. This is the problem. Chapter 2. It goes all the way down. They go into the problem. Is that the problem?
Fix the-
I have to take Emma's book back. Okay. Well, okay, I'm glad y'all had it, even though you didn't know you had it. Okay. Okay. Now, Eva, that problem, we are down to D. Done A, B, C, now we're down to D. The first three folks got their entries backwards. We gotta get out of this backward panic. Okay? So Eva, first off, what are we buying? And entry D, what are we buying? It's reading there, it tells you what we're buying. What? Office and what? All right, that's what you did. That's what you get. That's what you did. All right, and how are we buying it? And don't look for their approval. Let them All right. You're not paying cash. How are you buying it? On account. That's a clue to what your credit accounts pay. You guys make your journal entry. Just think about it. Okay. Bright eyes, when you try E, Millie.
So take cash. The supplies.
What are you getting? Supplies, so there's supplies. How are you getting supplies? That's what you credit. Yep. So, you start thinking about, they'll come okay too. With the rent, We paid cash for annual insurance policy, $4,900. All right, credit what? All right. Now, always say the debit first. All right, she said debit, prepaid insurance, and credit cash. All right, she had it correct, but she said the credit first, but it's okay. It's written out on paper to be correct. All right. Receive cash from client for plans to live.
Debit cash and, credit professional fees.
Debit cash, credit professional fees. There we receive cash. That's when you debit cash is when you receive cash. All right, Cardinals paid cash for miscellaneous expense. Cardinals. I believe he wants his name to be Alter. Too bad it's Carlos. Alter is inside it. Okay, Carlos.
Miscellaneous expense to debit
Right, debit miscellaneous expense.
and
Cash.
cash,
And credit.
credit cash.
Okay. All right, then we pay cash to creditors on account. Alter. How about that one, Alter? Pay cash to creditors on account, 4,500.
I guess it's credit cash.
You do credit cash, yeah. Now, see, he's wanting their approval.
That's the first step, I guess the first.
Right? You got the credit cash, so what are you doing? You paid the credit.
Yeah.
Right? When you owe for your telephone bill, that's a credit. You owe the car payment, that's a credit. You're going to credit cash, like you said. You're going to debit what? Accounts payable. All right? I didn't really punish you, I'll give you all 5 rounds of this. But anyhow, if you guys have something going on, I don't know about. You either seeking approval or, I don't know. I hope you want the other person to succeed, be correct. What?
We're doing accounting all the time together.
Oh, are you?
So
Okay,
it's funny.
okay.
Because he did it till like 4 a.m. last week.
4 a.m. in the morning?
Keep part
Because I'm really motivated.
Okay.
He's trying. That's what.
Did you have Georgie with you?
He doesn't want to help us.
No? Georgie should want to help you. Okay.
We're gonna pay him. He only works for money.
Oh, he'll do that. He likes money.
Credit.
Shut down. Ready? Georgie, the deviation credit to the revenue. Okay, that works. Georgie is taking 24 hours credits and working. And, she have a girlfriend?
Yeah, she's in the tennis.
What?
She's in the tennis team too.
She's in the tennis team. Is she also in your building? Is she in your motel?
Yeah,
Okay, that's what it is.
they look.
No, that's what it is. That's what I told Georgie. He didn't want to do you, because his girlfriend gets jealous.
Makes sense.
That does it? Okay. See, I'm ahead of you all on this. See? I want to tell Georgie. To be up.
That's that accounting mind.
Yeah.
Thinking ahead of us.
Okay. I told Georgie, I said, we need to. Anyhow, anybody, we paid 5,000 on our notes payable. So, what would you name? Anybody? Notes payable, credit one. All right, we received invoice for blueprint service due in November. Now, somebody gave us blueprint service. An invoice is nothing but a bill. So they sent us a bill, and we owe them. So what would we debit? Now, in your accounts, they're down there. Blueprint services, is that one of the expense accounts? It is, isn't it? Blueprint. See, in your first paragraph, it gives you the accounts. You've got a debit, you've got a credit. You cannot make up your own. And students want to write down paid cash. No, I don't want the word paid in there. Paid cash on account. I don't want nothing in there but cash. You put paid cash on account explanation if you want to. All right. So we received the invoice, we would debit the blueprint service expense, and we would credit accounts paid. Recorded fees earned on plans delivered, payment to be received. Now, did we get the money for these plans? L, did we get the money? So what do we have to debit? Somebody owes you something, what is that? So receipt. Accounts received. And we credit what? These are professional fees. What are they using? Are they using? They're using professional fees. Paid salary of the assistant. Salary. It's an expense. Debiting and credit cash. Paid gas, oil, and repairs on automobiles. Well, do we have a gas, oil, and repair expense? If we don't, put it miscellaneous expense and credit cash. Now, that was your journal entries. That is also your T accounts. And your T accounts would look like this. All right. Now, cash, we had two debits. The owner deposited money. William had that entry. That's where you debit cash. And William came down here somewhere and credit 36,000 capital. Okay. The other cash came in as a debit to cash and a credit to professional fees. Okay. The other professional fees came in as a credit because we earned it, but they haven't paid us, and we debit accounts receivable. All right. And here we had to take our cash, and add the debits, and add the credits, and my pen won't write up there. But does anybody have those added? Does anybody have your, my pen don't write on this. Add your debits, subtract your credits. What is your cash balance, William? What?
I don't have it written down.
Morgan, do you have the cash balance? All right. William, did you do the trial balance? Then you got it written down. Look at your cash and your trial balance. You got it, Morgan? You got the trial balance? Oh, you did?
Yeah.
Okay. Evan, do you have the unadjusted trial balance?
Yeah.
What you got?
14,000.
You see, when Evan took the difference in that T account, 14,085, 065. Well, that's what it has here. That's the balance. When you add the debits, subtract the credits in it. Equipment only has one debit, 9,000. Then that's what goes on the unadjusted trial balance. Equipment, 9,000. But do you see where these balances on the unadjusted trial balance come from? Okay. Now, we're going to do one more problem on this chapter. we'll probably have to leave it and start looking at chapter 3. But I want you to look at this term right here. What does it say? All right. So in chapter 3, we will adjust the trial balance. Now, let's say you totally flunk next week's test. Chapter 1, 2, 3. Let's say you make a 30. All right. I will let you count the second test double. If you make, let's say, a 90 on the second test, you want to count it double. You'll have 2 90s, not a 90 and a 30. Okay? So you can flunk next week's test and still be okay. That gives you time to get caught up. And why am I doing that? The second test is just about like the first test. You'll have a balance sheet, income statement, equity statement on both tests. You'll have journal entries on both tests. But test 2 will be one problem, as I'll show you tonight. Now, what's on your test next week? You're going to have journal entries that we practiced tonight. We're going to practice problem 4. Anybody else do problem 4 in your test? All right, only more. But now you've got journal entries and sin gauge too, don't you? And you had a balance sheet, trial balance, and all that, sin gauge too. Okay. All right. William, what'd you make of chapter 1, sin gauge?
98%. The last question is
98. 98's good enough. Okay. Let's say something happens if you don't get chapter 1 finished. I'm gonna say 9 or more. But anyway, if you didn't get it finished, you've got 10 chapters. If you made 100 on 9 chapters, 0 on 1, it still averaged out to be an A. Okay. All right, because a 90 is an A. So that gives you a way out if you fail the first test. Everybody pray. And I've had students fail the first test bad and made 95 and 100 on the second test.
On that chapter 1, same page, he had instructed on the very last problem, the boxes are in the wrong places, so we can line up. So we, I wanted to get 100, but we can't because the last question's messed up.
That costs you how many points?
Me, it cost 4, so like 96 points.
How did it cost you 4, William? Did you get that last problem?
I might have removed my question wrong, or my grade wrong, but I didn't get that last problem.
But don't mind up, I'll give you those points. Don't worry about it. What?
I checked Chris's, he thought he was messing up, and I looked at this page, and it was taking fees earned and putting it into expense, and then changing the balance to the
It messed it up itself. That's why I say I'll give it to you. Don't spend a ton of time on it. You don't have that time to worry about one problem. But anyway, Christopher, does she talk that gentle and slow at home? Does she ever holler? Never holler? Okay. Anyhow, okay, so this is your trial balance, proven debits and credits. And these balances somehow or another are faded out here. It asks you for net income. On a trial balance, you would have to take the professional fees and subtract the expenses, and you've got net income. That's all income statement is. Take that net income and add it to beginning capital. Well, I just want one of those, but. And subtract drawing. There was not a drawing, was there? But just add net income to 36,000, and then you have your capital statement. All right. Now, if you look down at problem 2, which you didn't do, can you look at those journal entries and know what happened? So, William, I'm going back to you on this one. William, what happened on entry 1 up here?
Debited cash 40,000, credited capital 40,000.
Right, same entry you had before. But in a T account. Morgan, what did we do in entry C? Wait, entry B, Morgan, it's up there, but it's here. Entry B, we paid what?
Take it out.
Make it out, rent
Rent
expense.
expense, 6,000.
Yeah, it's got them overlapped. All right, Evan, what did we do on entry C?
And supplies, credit, accounts payable.
Yeah, we all see that. So what did we do? Why did we debit supplies and credit accounts payable?
Supplies is what you're buying, and it's on account.
That's right. There you go. That's what I wanted. All right. Eva, what did we do on D part? D part, what happened? Somebody help. What happened on D? We paid our creditors. $750. It could have been for supplies. So we debit accounts payable, credit, cash. Billy, what happened on E part? We earned fees. Did we get money for it?
Yeah, so let's.
Okay, we earned fees, we got cash, okay.
What's funny, that's what happened.
That's right, Billy, what's funny, that's what happened. Okay, Christopher, what happened on F?
Pay for automobile miscellaneous.
All right, we paid the automobile miscellaneous expense with cash. And Miranda, what did we do on G? All right, paid our salaries. Okay, author.
Oh,
Artist. He's Arthur.
Author.
Arthur.
All right, what did we do on this one, author? I worry about these guys on tests, they get their names mixed up. Okay, author, what did we do on that last entry, H?
Of the toughest one.
What do you think we done then, Carlos?
What?
What did we do on entry H?
We spent on some.
We went out and counted our supplies, and we had used 1,400.
Trading, basically.
We credited our supplies to show we used them, and we debited the expense. Now, that's called an adjusted entry, and that's what we'll have in chapter 3. That is an adjusted entry. You gotta get that right to get your trial balance right. All right, we're gonna skip over to problem 4A. But I'm gonna give you time to jot down. Wish I'd have brought you some journal paper, but I did not. 3A was journal entries and a posting. And remember, on a test, I will not test you on posting. You do not have to post on a test. All right, now what's on the test? Chapter 1, I'm going to give you those 3 statements: the balance sheet, the income statement, and the capital statement. I'm going to give you an accounting equation and a couple of multiple choice. Just an accounting equation. Not that big long one where you have to go all the way down to the bottom. All right. Chapter 2, what am I going to give you? One problem, journal entry. That's what we're going to practice, problem 4. Now, chapter 3, I'm going to give you 2 little problems on adjusting entries. We're going to practice those before the night's over. Okay? So we'll be practicing almost everything tonight that's on the tee. got a week to study, get ready. All right, I'm gonna give you 5 minutes to jot down some journal entries from problem 4. Just jot them down on plain white paper. Now, Morgan over here, she draws her journal thing. She uses the red line on her paper for the day column. Draws her another box here for the account, debit and credit. Draws 2 lines here for debit and credit. What do you put on that one? Oh, okay.
Jot it down.
Okay, I'm gonna show you the first journal entry. Guys. Sheet of paper, right? Journal paper. More through it. See, I use a couple. It says closing entry, but it's going that, so. We're gonna have this. Just use this journal paper, do the credit, skip a line. So, let me give you the first entry. All right, on the test next week, I want journal entries. You don't have to give explanation. Now, this is the first one on problem 2-4. Debit rate expense and credit cash. Now, you don't have to copy anything to post a reference because you're not posting. Debit rate expense and credit cash.
It starts at 1.
What?
100 is where it actually is.
Oh, okay, page one.
It starts on 99. But then
Page 99, it shows you the accounts. Page 99, you have the accounts, but on page 100, you have the transactions.
Skip one line. Skip one line.
What? Skip a line, yes. Yeah, no, Yeah, try to put your name into a little closer to the. But that's okay. Don't change it. Can't see. Purchase land, build a future site. Then land. And credit for education pay. Give a notice payable for their land. I think that's what I wanted to do. Trouble they had, buddy. Okay, well, yeah. They get it.
Just for one day. Just
Well,
for one day.
What's it going? That, like, one of our states, is that just a city?
Barcelona is city, that's the state where Barcelona is Catalonia.
Okay.
And in Catalonia, we speak another language. It's not the same.
The whole state, like the whole state.
Yeah, Catalonia.
It's not just one city.
Yeah. Just
Okay, now folks, let's look at these. I believe most of you are getting them. That's one big problem on your test. And you need to go back to chapter 1 and review those 3 statements. That's second big problem on the test. And the other problems won't count as much. But a problem like this will count at least 20 points on your test. And the balance sheet, the income statement, and so forth will count at least 20 to 30. All right. We've already looked, I've looked at a couple of these entries with most of you, but debit rent expense and credit cash because you paid rent. Debit off supplies and credit accounts payable because you bought off supplies on credit. All right. And most of you got to this one. Now, Millie, did you straighten this one out on your paper? Did you debit prepaid insurance? All right. Now, if you pay, Morgan, you pay your car insurance, don't you? You pay it 6 months at a time or a year at a time? 9 months at a time? What, every month?
Yeah, I pay for 9 months.
Every
I
month.
get 3 months off.
So you don't pay 9 months in advance. But do you
Pays it for the year.
do you write out a check every month for 9 months? Okay. When she's doing that, it's not prepaid. To her, it would be insurance expense and credit cash. And to her insurance company, they would debit cash and credit insurance revenue. Okay, William, do you pay your insurance in advance? Okay. Miranda, how about you? Do you pay your car insurance in advance? You pay 6 months at a time or a year? What? All right, when they pay and I just paid my 6 months insurance. If I were a company, I would debit prepaid insurance and I would credit cash. The insurance company would debit cash and credit unearned insurance premiums. All right. But if I were only paying a month at a time, I would debit insurance expense and credit cash. It's when you're paying for more than an accounting period. Now, accounting period we're assuming it's a month at a time. But some companies are so small, they can wrap up their stuff in December. They just do it for a year. But don't advise that. Keep revenue and expenses per month. That would be a very small business that didn't keep records. Now, I had a tax office for a couple of years, and I would have small businesses bring in 3 shoe boxes full of records. We do their taxes. I said, you got a year of bookkeeping there. I'm not gonna do a year of bookkeeping and do your taxes. So I told them to take and separate the revenue per month and their expenses per month, and I would do their taxes. Okay? They had no records. And then I had one guy that had a hobby making lead. And he was getting pretty good money from that lead. But he was putting it in his personal bank account. Writing expenses out of his personal bank account. I said, you go separate your business income and your business expenses from all your personal stuff, and I'll do your taxes. Okay? That's what a business entity is. You keep it separate from your personal checkbook. Okay? Now, out of 9 of you, one of you here will be a small business owner someday. Maybe more, but keep good records. I have seen good businesses fail because they did not keep good accounting records. All right, moving on. Here, somebody paid us what they owed us, or some amount. They debit cash and credit accounts receivable. And here, we bought land. A couple of you had questions about this, and that's okay. But remember, what did we get? We got land. What did we give up? Cash. And we signed a document, which is a liability. Notes payable. Now, all of you got down at these 5. Mortgage, you come on, correct? William? Evan? Come on, straighten that middle. Deal. Okay, guys. We get all 5 of these correct?
I put fees earned instead of account receivable.
Fees earned instead of what?
Instead of account receivable.
All right, that's an easy one. It's easy to get mixed up on. Yeah, easy to get mixed up on. We're getting cash from our clients. Now, if we just have performed services, it is fees earned. But if we performed services in the past, it's accounts receivable. You're going to be able to separate that on a test. So all of you did pretty good on those first 5. All right. The next one we paid on our account. We bought supplies on account. We might need to pay some of that. I don't know how I got that to highlight a minute ago, but I don't know why it flipped all the way back on me either. All right. Now, what happened here on the 20th? I don't know if you got there or not. Everybody go down and read the 20th. Now, on the 2nd, we bought office supplies, and we credit office supplies, and we credit accounts payable. What did we do on the 20th? Did we send some back? If we send them back, we don't owe accounts payable for them anymore, do we? So we debit accounts payable. And we don't have the supplies anymore, so we credit supplies. This was a long problem. All right, here's a funny looking entry on the 27th. Huh? Let's see now. All right, let me see. That's not the end of the problem, 29. Is that the end?
Paid advertising expense.
Okay, let me look at the 27th, John, make sure. All right, here we discovered an error. We posted wrong. Now, I'm not going to give you any error corrections on this test. We'll let you get better at understanding the basics first. All right, but we had debited salary expense for 25,000 too much, and we had credit cash for 2,500 too much, 100, not 1,000. So we had to reverse that when we found a mistake. Okay, I'm going to look at these pretty fast, so bear with me. Debit automobile expense, credit cash. Debit miscellaneous expense, credit cash. Now, debit accounts receivable, credit fees earned. Here we did services today and we didn't get the money. Here we paid salary and commission expense. Here Lester Wagner took out some money for personal use, drawing. And here we got some cash in advance and we credited on earned rent. Now we're going to be working with that tonight. So that's some journal entries that you can expect. Some of them are similar to them on the test. And I believe all of you are getting a start on those. Okay. Now, all of you have an A in this class until you take that first test. And I hope all of you still have an A after that first test. Okay. If I asked how many wanted to make 100 on the test, all of you would raise your hand. Yes. Okay. But prove it to me that you want to make good on this test. Okay. When I look out at all 9 of you, I do not see any retards. Okay. All right. All right. I've been teaching so long, I'm serious. I could look at you all tonight. I could write down your grade, what I've already seen, that you will come out with 12 weeks, whatever it is from the day. I might miss only one, but I don't want to do that. That's reckless. That's targeting you, you know. But I see all of you coming out of here with at least a C or higher. Okay? Because you are catching on pretty darn good. All right, now this one you were supposed to post. Now, Cengage Chapter 2, who is finished with it? All right, did you have to post like this, Carlos, on Cengage? Miranda, did you have to post? Yeah, from the journal to the ledger, you didn't have to post? All right. As I said, posting is important, but in the day of computers, that's one little boring thing we can do away with an account since computers was full. But accounting has came a long way. It's definitely not boring. I have students in all walks of life. And the area where I'm from, 2 of my just 2-year accounting students are bank presidents. Okay? And up this way, I have a couple CPAs, down in Edwards, a couple of people there, our S agent, and so on. So I have people in all walks of life. I went down to Southwest Community College last week with my dean, with our new provost, Dr. Lewis. And it's a small world. Our new dean up here is from Palisade State in Tennessee. It's a 2-year college. My granddaughter went there as a dual enrollment in high school and earned a year. And and she graduated from UT then in 3 years. That's where Dr. Lewis comes from, Palisade State. When we went to community college, they got a new president and a new dean. They both came from Cleveland State. That's the city my son lives in. My grandson will start at Cleveland State next year. It's 100% free tuition. If you're a Tennessee resident. Okay? And community college is starting to give 100% free tuition. The counties are paying tuition for their students if they can't get paid over any other hand. So there's no excuse not to go to college today. Okay? If I could do it back in my time, anybody could do it. But it's a small world, so I met that dean and president from Cleveland State, and our new provost is from Palisade State. So, and of course, I knew everybody at the community college, and the dean of the School of Business at community college was my student. Okay. So they went out to all walks of life. County gives you a flexible, or CEOs and CFOs, auditors. My daughter graduated from accounting at Virginia Tech after she went to community college. So she went to community college, that's where I worked. And she became an auditor for one of the big 3 accounting firms. She got to travel to 39 states. She audited companies like Anheuser-Busch. She audited nursing home. Cracked up those old men, like coach with her. But she would go out and audit the construction site. She would put on a hard hat, go make sure the serial numbers on the dozers match what the company said they had. That's assets. She was auditing their assets. And one company, she was auditing a cement company. She had to climb up on a 50 feet tall silo and drop a tape measure down in the silo to see how much cement mix, whatever was in that one silo. And with her math, she had to know the circumference and radius of that silo. She could figure out what asset they had on their books for cement mix. So she found it interesting. She became a budget director of a company in a hospital in Knoxville. So there's so many jobs, it don't have to be boring. Excuse me. Let's take our 15-minute break right now. Guys, I'm not wearing not Nike. Uh-oh, here's Nike. Wearing Nike shorts and Nike shoes. You know what I'm talking about? Anybody know what I'm talking about? Nike. Miranda, listen to Miranda.
So I can't see his name, but he kneels.
Pure Pack.
Yeah, he kneels during the flag, and there a lot of people are buying Nike and burning it, and like veterans are taking their socks and taking Nike thing off because he's protesting police brutality, but they're taking it as a sign of disrespect to the flag and the country. But it's highly controversial.
Nike hired him to be in their commercial.
Oh, is that the football part?
Yeah.
Oh, yeah, I heard.
Okay, so their stock went down 3% yesterday, 400 something. Some people went out and bought their Nikes and burned them. But you're not from this country, don't burn
No, too expensive.
Okay, take a break.
I lost my laptop on this. No, I didn't.
This one.
Which one is the best tennis player?
Not me.
You're better than the all four?
Yes.
Okay,
Yes.
so you're better than Arthur.
Yes.
Okay, you're better than the girls. Now, which one of the two girls are the best?
I don't know. I don't know.
A draw?
What?
A tie?
What?
A tie.
Tie.
Yeah, a tie.
Maybe. Very equal.
Yeah, equal. Okay.
I wanted to ask you about the time today, but I couldn't get your attention. I thought you were asking Sarah your name. What's his name? I was gonna ask you about the homework stuff.
Well, I've only done chapter 1, and then I didn't do that last question. Just was all messed up.
I thought it was fine. Because it's like 9:06 to 12 a.m. Everything was like I went over. I was like, I'm not this deadline.
I got a couple weeks where we don't have to do anything.
Um,
I'm looking at y'all's answers and I'm like, I just pray I get a pass.
So
So
the
then
only reason I do a bunch of and then I do it right before, so I remember it all. And afterwards, I'm like, wait a second.
I work there all day, like on my business, and then do before I come in. So I don't think I don't have to like train my brain by the time I get here, because then I'm like, I just. Do you understand it?
Kinda, there's some stuff.
I just don't know how to do it. I wonder if he's gonna have the option for the journal entries. What they have to say. I simply have like a list of things to choose from, because I'm sitting there, that helps me, but
There's complaining about the I don't skip lines, but on Cengage you can't skip lines. So it's like, I know everything on Cengage.
yeah. And that's the only thing you're doing wrong, you're doing really well.
There's a way of, you go to chapter 2, or it's chapter 2, there's a chart. The way to remember debits and credits, I put some on time. Assets, debit increase, or debit plus, credit minus. Liability and other equity, credit plus, debit minus. And like even your expenses take away from your owner's equity, that's why they're debit. A lot of people get that mixed up, it's not plus owner's equity. It has to be plus credit, but it's taking away from owner's equity. It's like wrong is taking away from owner's equity, so that's debit. Any decrease is debit and any increase is credit.
I think everybody thinks it's like the opposite.
I had so much trouble on that.
I was looking at that in the book today, the little chart, flow chart that shows you all that, but. That's even better.
Or even like realize what assets was understanding. So what I found out is all expenses are understanding in capital, you know, how your drawings from capital, and revenue, any rent revenue, any fees or professional fees, it's all understanding. Liabilities is nothing but payable except for unearned rent. Unearned rent is the only thing. Something payable after, and then the rest is all assets. So, chapter 3, there's something coming up called accumulated. I can't say it for some reason.
Depreciation.
Yeah. And then it'll do office equipment, building, and it probably has land, open book or something like that. But, it's an asset. And then it doesn't go into any of your other expenses, it's only entire expense.
Did you do journal entry though? Is that what that was?
You first you journal entry, and then you have to adjust it backwards into your unadjusted balance. So you'll get like a whole big unadjusted balance, and then the unadjusted balance is like kind of easy. Once you figure out, hey, I credited this, I debited this, and then you just take that all and minus it from, or plug, like, add or subtract it from what you're adjusting.
How would you say? Just about. I think this issue is, we had in the first chapter, we had this. balance sheet, like, that we just said, I'm like, I have to have it right, make sure we just didn't forget.
The way I remember it, so your income statement is always your fees are minus your expenses. And your statement of equity is basically, those kind of like memorization, capital, additional investments, and withdrawal, increase in equity, and your last capital. I was a pre-med.
Okay.
I did a lot of research before. But I realized there's some jobs in science and
Sorry.
health.
So something to do with science, just based off of.
I wanted to start a family and I took a minor in research management.
So you guys Let's just go.
Neşe ediyorsan.
And I realized a lot of people anyway later on have their own medical. If I do, I have a legal costs and right now. If I wait to get my employee insurance, let's say I get a package of 720 or 730, and my family has a history of over.
Joyce, qu'est-ce que c'est?
I'm not I pay my insurance to work, and I'll probably pay Costco for Yeah. Yeah, I'm telling you, you're exactly right. No doubt.
All professors.
Ya puedes juegos.
I was on research.
No?
I wanted to be a neurologist. And they told me very flat out. And then,
J'ai quelqu'un ça
all
parce
the
que c'est
I was taking 20 credits freshman year of semester. I was taking microbiology, chemistry, all my hard classes, just like the education. And I did this because I know what it's like. But I got to know I want to like
Right off the bat, that would be
Moi, c'est pas bien. De la même manière, on voit la vitesse. On a la vitesse.
Well, mentor told me I work harder than anything to get certification. So I was working like 60 hours. I'm working 8 people.
Oh, yeah.
Spectrometer, I was working on spectrometer, I was doing the cytotoxicity of programs on isolated. So, I had to look at
Just what you said, not for me.
I had to remember all that. I had to remember, the log pathway. I had to remember the, composition of the biome and I'm still a freshman. So I switched up like what? And so cool. And I can actually do all that.
Tonight is a very special event. It's a big motorcycle, a big event, and I need your support. So I bought you something to wear. Sorry, but you have to iron it.
Sorry, guys.
Yeah, we're gonna meet him, we're gonna tweak out that shade, we're gonna do haircuts.
Oh,
That's my major talent.
Imagine, regarde. C'est la parole.
Start.
It's crazy. It's first one.
Non. Et on... Oui, c'est bon. C'est bon. Mais si tu veux.
Wish. Okay, let's get our last hour, whatever, going. Arthur Carlos said he was the best tennis player. Is that true? Huh? Carlos said he was the best tennis player. Is that true?
Not really.
Not really. He's got confidence, though.
Too much conflict.
All right. See. Okay, let's start chapter 3. This is the adjusting process. We're on the accrual basis of accounting. Now, if we were a small business, if we were a plumber or a repairman or even a tax accountant, we would use the cash basis. It would be easy. We only record expense when we pay cash. We would never have prepaid insurance. We'd just have insurance expense and credit cash. We'd never have supplies. We would never make that adjustment for supplies. We would not have accounts receivable for revenue. We would just have cash when we received it. Okay, but that falsifies the accounting statements. That's why we have to do the adjusting process. Now, we had an unadjusted trial balance in chapter 2. We got to do these adjustments to get an adjusted trial balance, chapter 3. Now, what I'm going over tonight, we're going to practice adjusting entries. That's all I'm giving you from this chapter is adjusting entries. Okay? Now, the accrual basis of accounting requires expenses to be recorded when they are incurred. That's what we did. We made debit salaries expense and credit salaries payable. Okay? And we follow GAAP, GAAP, Generally Accepted Accounting Principles. That's what every company in this country should follow, is GAAP. Cash basis of accounting, revenue expenses are reported on the income statement when we pay out cash. But we ignore that one. We study accrual basis. We recognize revenue when we earn it. All right, we recognize revenue when we earn it. whether we received it or not. And that's why we have accounts receivable and cash when we earn revenue. Same thing for expenses. That's called the matching principle under accrual basis of accounting. We match our expenses and revenue. And that's why we have to learn adjusting entries in 1 hour. Okay, we can do it. The journal entries that bring the accounts up to date are called adjusting entries, of course. Now, you have done one adjusting entry in Chapter 2 and Chapter 1. Now, indicate whether yes or no. The answers are here, but we never adjust cash. We don't adjust land. Now, we might adjust utility expense, but hardly ever. We definitely adjust wage expense and unearned rent. All right, accruals and deferrals. Now, everything in accounting has reverse. An accrual is reverse of a deferral, as you'll see. When revenue has been earned or an expense has been incurred. That was our journal entries in Chapter 2. All right, but here we had accrued revenue. We earned some revenue, so we have to debit accounts receivable and credit revenue. Now, this is at the end of the accounting period. You know, on December the 15th, we may debit accounts receivable and credit revenue. But this is when we get to the end of December and somebody owes us money, we debit accounts receivable and we credit revenue. And we bill them. We find out we have an expense we haven't recorded, we debit the expense and credit the account payable. All right, here's a prepaid expense and unearned revenue, okay? Now, this is a deferral. Now, if we recorded unearned rent credit as a liability, well, let's see. We'd have to debit prepaid rent. You would debit prepaid rent, credit cash. The other side would debit cash and credit unearned rent. Now, here's what you do at the end. You would debit unearned rent and credit rent revenue. So we need to practice those. They are reverses. Here's 4 common adjusting entries. This one is the accrual. Supplies on hand is the prepaid. Fees received but not yet earned. That would be the unearned. Fees earned but not yet received. That'd be the accrued revenue. Now, let's take this one for example. The college received your tuition. You prepaid your tuition. If you hadn't prepaid it or somebody paid it for you, will be asked to drop you from the class, asked you to leave. Okay? So you're prepaid. Now, the college recorded cash, and they have credited unearned tuition. Now, if you drop out of college in the first few days, you probably get 100% refund. If you drop out a little later, you may get 50% refund. What if you dropped out today? How much refund would you get? Your tuition? Would you get any or 25% or what? Okay, so your tuition is prepaid. What else do we prepay? All right. Some of you, you might buy season football tickets to Virginia Tech or West Virginia U. You're prepaying for your football season. After each game, they have earned one, remember how many games you paid for home games, let's say 6, then they've earned 1/6. If to go to that home game. Now, you prepay for meal tickets, you prepay for magazine subscriptions, you prepay tuition. Now, if you ever need an attorney, you usually have to prepay them. Okay? Now, let's say you got a divorce attorney, Miranda. All right? He may want 5,000 up front to have a go divorce, or 3, let's say 3. Let's say you got him at the end of September. Well, there's 3 months left, October, November, December. And he figures he'll have your divorce wrapped up by the end of December. But if he's keeping monthly records, he's earned 1/3 of his unearned attorney fees after a month, another third after another month, and all of it when you went to court and you got your divorce. Okay? And by the way, you had to pay Chris alimony. He didn't have to pay you alimony. Okay. All right. So we prepay a lot of things. It's unearned to the person receiving it. It's prepaid by the person to it. Okay. So that's how you get the prepaids and the unearned. All right, now A and D are reverses. What's accounts payable to one person is accounts receivable to another. Okay? If a company owes you wages, it's wages payable, but it's wages receivable to you if you were keeping books. So here's the unadjusted trial balance. You prepared 1 or 2. There should have been a dollar mark. No, trial balance, you don't need to put dollar marks. You don't even need to put account numbers. We do know on a trial balance, we put all of the assets. We put all of the liabilities. There's 2 of them. We put the capital accounts. There's 2 of them, but drawing has a debit balance. We put the fees earned. There's 1. And we put the expenses. There's 4. And you see the liabilities and the revenue and the capital. I may get them reversed here. Capital and revenue are all credit. Liabilities, capital, revenue. And you see the assets have a debit balance, the drawing has a debit balance, and the expenses have a debit balance. All 6 accounts go on a trial balance. Now, from this trial balance, if it were the adjusted trial balance, I could take the fees earned and expenses and do an income statement, can't I? I can take the beginning capital and add net income and subtract drawing and do a capital statement. Then I can take the assets, the liabilities, and the ending capital and do a balance sheet. So I can do all my statements from this one form. So we're adding on some new accounts. Accumulated depreciation, wages payable, rent revenue, insurance expense, and depreciation. So if we need to add on accounts as we go, we can, but these are some new ones they're showing you. Okay, accrued revenue. You get down to the end of the year and you found out that you worked somebody for 25 hours and you're going to bill them for $20 an hour, they owe you money. You have made this entry before. If somebody owes you money, debit accounts receivable and credit fees earned, it will count as your 19 and 18 revenue, even though you don't receive it until 19 and 19. Same entry, different amount. And wage expense. We know your payday don't fall on the end of the month every time. Now, we have asked you before, paydays, up here we get paid twice a month. We get paid semi-monthly. Now, would you rather be paid more than semi-monthly or bi-weekly? Morgan says, huh? They're both twice a month, and she's wrong. Okay, Morgan, if you're paid semi-monthly, how many paydays do you get a year? 24. You're right on that. So if you're paid bi-weekly, it's every 2 weeks. How many paydays would you get a year? 26. Not the same, are they? Okay. Bi-weekly is every 2 weeks. Months don't have it actually 28 days in. Some of them have 30, some have 31. Talk about that later when we need to know the days of the month. Okay, so all your paydays don't fall at the end of the accounting period. So at the end of the accounting period, if a company owes you money, it's an adjusted entry, wage expense, debit, and credit wages payable. And therefore, this expense will show up on your 2018 income statement, not on your 2019. In 2019, your January, we pay that expense, the new pay, and then of course, credit cash for the total. This is just a calendar trying to explain accrued wages to you. All right. We talked about this one before. Now, somewhere ago, you debit cash and you credit unearned rent. This lawyer probably debits cash and credits unearned attorney fees, unearned legal fees. Okay? Many years ago, you weren't born, but you West Virginians, you had a tragedy with one of your universities. All right? Do you know what I'm talking about? And what am I talking about? Marshall University, the football team, they all got killed in a plane crash. I've not been on that campus, but they say they've got a monument. You've been on the campus? You've seen it? All right. If you had a season football ticket to Marshall University, they had to cancel all games, and you got refunded. That's why it was still a liability to those games are playing. They debit cash, and they credit unearned sports fees or football fees or whatever. But they had to refund everybody their money, so they debit unearned fees and credit cash. That's why unearned is a liability. Now, many times you have to pay a deposit. Electric, one time you have to pay on telephone. Electric company would have to debit cash, credit, unearned deposit. And if you kept your bill up to date, you'll get that back. That's why it was a liability. Now, if any of you rent, you have to pay a damage deposit. You don't have to pay a damage deposit for the motel. Don't know?
Yeah.
You have to pay a damage deposit?
Yeah.
All right, supposedly, if it's the same way it is, you'll get that damage deposit back. That's why that damage deposit is unearned. They owe it back to you. You don't try to place down. Okay? Wait till you're a senior in last semester at least before you turn it down. Okay? All right. Then we've got, if we omit these adjusted entries, we'll understate income or overstate it. We'll understate expenses or overstate it. We'll understate capital or overstate it. Now, you've done this entry before. You have done this entry. You go out and count your supplies. Here, we had a balance of 2. All right, but we used 1240. That leaves us 760. But that 1240 has to come out of supplies. So credit supplies and debit supplies expense. You have been making that entry, but you didn't know it was an adjusted entry. Supplies were prepaid just like prepaid insurance and prepaid rent. Prepaid magazine subscription, prepaid football tickets, prepaid meal tickets, prepaid tuition. Insurance, it works the same way. I want you to look at this word. How much insurance did you have? You had 2,400. You added 36 to it, made 6,000. How much was unexpired? So how much is expired? Is that 2,750? Be careful with this word. How much is unexpired? William, how much is unexpired?
Unexpired,
Yeah.
3,200.
All right, but what if I said expired, Evan? How much is expired? All right, be careful with expired, unexpired, used, unused for supplies. Unearned or earned for unearned revenue. Be careful with terminology. Fixed assets. Building and equipment will be depreciated. Land we do not depreciate. Now. All right, what do you think makes an asset depreciate, Millie? How old is your computer? Yours or Eva's? How old is it? How old? How old is your job?
I have 6 years. 6.
6 years? Still updated? Everything still updated on?
Yeah.
You have Windows 10?
No, it's Mac.
Oh, okay.
iOS.
Yeah, it's Apple. It's okay. Different system. Okay. What I'm trying to say, 9 years ago, this building was remodeled. And they put in new equipment. Equipment got outdated. Still used a monitor. That's why I used a tablet. I used to have a TV monitor up here and a pad over here. Some of the other rooms still. But wear and tear on something depreciates. Something obsolete depreciates. I got one of the first computers at home that I hardly ever used. It was a TI-99, Texas Instruments 99. I had to program it with a cassette. I used, excuse me, basic language. Binary system, zeros and ones, zeros and ones. Had to program to get to do anything. Had to program to get to add. That's totally obsolete. Your first cell phone, you could only talk on it. They're obsolete. The little flip up. Now you got cell phones that does everything. But Apple tries to make their cell phones obsolete by coming out with a new version, new better, new bigger, new whatever. New brightness, new gigs. Make their old ones obsolete. Make you think they're obsolete. Depreciation, that's wear and tear. Okay, land does not depreciate. Land is like a female part. It depreciates, it goes up in value. Equipment is like a male, it depreciates, we go down in value. Okay? The two women go up in value, over again. All right. So we depreciate something. We'll worry about later how to calculate depreciation, but not today. That's later on. We're going to practice adjusted entries, but this depreciation entry is entry number 5. You debit depreciation expense and you credit accumulating. So if that equipment is on the books at $1,800, that's called cost probably. And if your accumulated depreciation is $50, AD, that means accumulated depreciation. So your book value is $1,750. Book value. And what do you show on the balance sheet? Book value. Accumulated depreciation is an asset with a credit balance. It's called a contra account. And it tells you the same thing here. Book value is cost minus AD. Same thing here. Same type of entry. Summary of adjustments. Now here are your entries for adjustments. We got a little over half an hour to go to learn adjusted entries. We got two. You can do it. All right, here's some examples. Fees earned but not yet billed. Wages owed but not yet paid. Rent revenue earned. Supplies used. Prepaid insurance turned into insurance expense and depreciation. Those are 5 entries I want you to learn. Now we need to practice. We're going to the end of chapter 3. We're going to the exercises in chapter 3. I don't like those exercises. So 4. So we're going to go to problem 1A, page 148. We're going to practice 1 or 2 or 3. 1A, page 148. Now, has anybody went to chapter 3 on 10 gauge? Are you finished, Miranda? Chris, are you finished? Miranda, did you just do a lot of adjusted entries on?
You did a lot of, the journals, and then you, adjust the trial balances.
Okay, that's what we're doing, adjusted entries. So you're already familiar with them, right? You're ahead of us, okay? Okay, take a blank sheet of paper. Turn in that journal paper there, use it, or turn it over, or whatever. I want you to look at those entries and try to make some of those adjusted entries. On problem 1A, put down your debits and your credits. Just think through them. What are you doing? Think through each entry. What page number? 148.
The problem number. Under the, sorry, I cannot pronounce that. All bases in accounting. Revenue from their later expenses.
Get that. Okay. You are on page, what now?
148.
Yeah. Problem three, basically. Yeah.
Just we have three, it's 1A.
Like 3-1, get on it.
It's not the same.
That's right. We're doing good. Okay, you have a great thing back here, so. This is the same thing I did this. That's the book. Okay. So, right there, check. Right now, so you will be the same. Anytime, just go explain it. Right here you are. Here, page 3 is a. That's the page of Paul. Okay, here's your see, go to your prefix. Down to your. Okay, that first one you shouldn't have any trouble with. We did it back in chapter 2. Everybody's gonna get that first one right. William did. Yeah. Oh, you don't have to credit it. So I believe Miranda worked ahead on CJ Jubilee that she already has. She's on the last entry. So she's familiar with it. Right. Put that away. Oh. Leave that. But she didn't calculate it.
Yes.
Okay, guys, what you write down for that first? You got half of it. Oh, now credit and supplies. Okay, credit supplies. Put the amounts down. Enjoy life. I don't know if it's gonna run or not. What do you got for that second? Looks okay. Just right now. What is the amount for that second entry? 9,000. Yeah, we are getting started.
I got the first one.
I know. What's wrong with that second? Skip a line.
Not sure what I did.
Well, what is the second?
Under rent count that was on 7/31 both representing the receipt and advancement on December 1st, 4 months.
Okay, I thought wages was the second. 9,000, let's see. What's 4 into 9,000? Well, what's 4 into 9,000? 250?
Yeah, 2002.
All right, 2,250. Now you earned that. You earned it. So you want to take it out of that one. All right? And put it in. So
it's under rent
Right,
and then credit.
right. Better. All right.
Yes, I always.
Who has their own side?
Not really. There's a more. Same point. I get that a lot. People usually make the front pictures and also make. It's like. Oh my God. Did you watch Game of Thrones? You know that girl who so they have. They usually don't have nice things. Oh my God. They want to call it. Yeah. Okay.
These Spanish
Except Carlos.
But the only thing about Carlos, Spanish is his first name.
Yeah.
Carlos. I have a Spanish son-in-law. My nephew is Raphael.
I love Spanish culture. So, have
Okay, now folks, check these out real well. I know some of you only have 2 or 3. All right. Please check them out real well because we're going to practice one more problem after I show you something in another chapter. But right now, does everybody have those first 2 entries? Supplies, you've been making that adjusted entry. Says chapter 2. All right. But you had unearned rent, $9,000. That was for 4 months. Now you've earned 1 month. You divide by 4 and get $2,250. So that's why you debit unearned rent and credit rent revenue. Well, I just can't write on this transparency at all. For $2,250. Now the next one, you owed wages. You're not going to write out cash right now. It's not payday. So you debit wage expense and credit wages payable. Now this is a prepaid. I can't write on here, but it's a prepaid. This is deferral. This is accrual. Now here's another accrual, but it's for fees. You bill somebody at the end of the month. So your debit accounts receivable, your credit fees earned. Some jobs you do, you don't know how much you need to bill them for until the end of the month. Then you bill them for a portion of what the job called for. If you could find a lawyer that would do your work for you without you paying him, then he would bill you like this: debit accounts receivable and credit and legal fees earned. Then we have one for depreciation, which I can't see on there. It's written over, but your debit depreciation expense and your credit accumulated. Now, I want you to turn in, look at a preview of chapter 4. This is not on your test. I just need to look at something in chapter 4 with you for a minute. Find page 190 in chapter 4. Find page 190. You find page 190. You get used to it. Chapter 4. I want you to chapter 4. Right.
Et en gros, tu vas arrêter, tu dois ajouter dans
Right.
c'est pour ça qu'il y a des et ça, c'est les acheteurs. Parce que les acheteurs, ils commencent à acheter. Genre, dans ce compte, ils décident de ne plus acheter. Et du coup, le prix des acheteurs. Alors, s'ils décident de plus acheter du pétrole, ils vont avoir c'est sur l'essence des voitures. Alors, c'est juste. Dans la guerre mondiale.
This is exhibit 2-1.
Et à cause de la guerre mondiale, on a ils ont décidé de boycotter le pétrole. Et le pétrole est complètement poussé et c'est tout comme ça.
right, look at that first page. This is a 10-column worksheet, not an official accounting record. But in chapter 4, it helps you put these adjusted entries in perspective. That's why I'll count the second test double if you do bad on the first one. You'll still have adjusted entries. All right, now, what do you have on that page? Page 190, what do you have? Just a trial balance, right? Now go over and look at page 191. Don't turn a page, just look to your right. What do you see on page 191? Adjustment. Now, you can write these out in term of entry form, or you can put it here. So I'm gonna ask Miranda first, because I know she'll answer it correctly. Okay? Now, Miranda, look at the A debit and A credit. What was the adjusted entry for the A entry? Debit account, receivable, credit, fees, earned. That's an adjusted entry. Chris, how about B? What's the B entry?
Wages, expense.
Debit, and what did you credit for B? Just journal in. This is what I go to the streets up here. Okay, Billy, what do you see for the C? The debit and credit for the C.
Unearned rents.
Debit unearned rent and credit.
Rents.
No, it's on here. Well, that's a C, and it's credit. All right. Whoa, no, wait a minute. Should it's credit or debit? Debit on earned rent. And credit what? Find the credit. Whatever debit, there's a credit. That's two good things. That's what I wanted. Okay, how about C there, Carlos? I mean, D. Look at D and see what we debit and what we credit.
We debit.
Right here. D, we debit rent expense. D. Supplies expense for D?
Yes.
And credit, okay, and credit.
Credit.
Supplies. Yes. Okay, those are just adjusted entries, what I wanted to point out to you. All right, now turn a page. When you turn a page, you've got an adjusted trial balance. Now, for accounts receivable, Evan, how did I get that balance on the adjusted trial balance? The accounts receivable. Yes. Yeah. How did I get it on the adjusted trial balance? How did I get that number of accounts receivable on the adjusted trial balance? Somebody help us.
Can you repeat?
All right, Evan, it's like this. Where is the accounts receivable? Right here. All right, page 2220. Add this to it. Add two debits. All right, you're going to add two debits. Now look at fees earned, Morgan. Fees earned. How do you get that balance on the unadjusted trial balance? You had two. You had two credits. Okay. Now flip another page. Now, when you flip another page, you made an income statement. What goes on the income statement? Look at column 7 and 8. What goes on the income statement? Revenue and what? Expenses. All right, now look at those last two columns, 9 and 10. Balance sheet items. What goes on balance sheet items? Assets, liabilities, capital, drawing. Your turn. Well, look at the next page. It's complete. Now, that's what I'd like to give you for the second test. One problem, where you complete this worksheet, as you do the statements, you write down the adjusted closing entries, which will add a little bit to it. Hopefully, you'll just have one problem on the next test. And this is pretty much it. But we're gonna learn chapter 3, the adjusted entries, to do that statement correct, don't we? Okay, so let's go back to chapter 3. One more thing in chapter 3, and we'll call it a night. Let's go to problem 5A. Problem 5A, it starts on page 150. Page 150. Now, when you look at that problem, what's the heading of those numbers? Unadjusted trial balance. Now, those are the accounts you need to debit and credit. Now, we've got how many bullets over there or dots? 1, 2, 3, 4, 5, 6, 7. You've got 7 dots over there. 7 adjusted entries. Okay, now I wonder if you're okay with the refund payment. Problem 3-5. Okay, now on that first one, it says unexpired insurance, 600. Now I want to repeat that word unexpired. Is that your expense? If it's unexpired, no, you still got it. It's your asset. So how much insurance did you have? 7,200? And unexpired is 600? So how much was expired? 6,600? 6,600 is expired. Now, jot that journal entry down. You'll get used to expired and unexpired, used and unused. The wording, well, if we've been wording insurance, and adjusted entry will be an insurance expense. And how did you find it? What did you subtract? Unexpired phone. So when you was ready, prepaid. So when you post it, there's 600 left. Okay, we're gonna try this way, second time. Okay, we've already talked about this. How many is there? I say 7. How about you guys do it? B part. Just do it again, just B. Right. You two, do C. You two, do G. Right, you're gonna do 10, you're gonna do G, you're gonna do H, which is receivers or dogs, they're not ABC. Yeah, okay. Just do one. Just do one. I don't want to do all that. Just do one. Well, you got the lights on. Or you got the next to the lights. Just put the third one. Something like that. Yeah.
Where's B? Where's B?
B is the second dog.
This.
Yeah. Second dog. Yeah, I made a mistake with it. A, B, C, D, E, F, G. But the second dog. All right, you've only got one entry apiece. Okay, you've had time to look at your entry, you've had time to talk about it. Now, A, we pretty much bypassed it. And here is A, you debit insurance expense and credit prepaid. Now, they gave you unexpired of 600. You had to subtract it from your prepaid of 7,200. Now, Carlos, you and Arthur, supplies on hand is 675. Well, you wouldn't want to call that an expense, would you? Because it's on hand. So did you subtract that from supplies over here?
Yes.
Of how much?
1,300.
All right, so how much did you use?
1,005.
Excuse me, and you would debit what? Expense and credit supplies, 1,305. Okay, Miranda, you all had depreciation. Boy, that's easy. What do you debit? That's easy, but no surprise, no subtracting, no adding, no confusion. And Millie, did you have the next depreciation?
So, we debit depreciation
And credit? Okay. Every example in the book are identical there, just amounts are different. And Evan, did you have, unearned rent was $22.50?
Right. Debited rent for 4,500, credited unearned rent 4,500.
If you'll reverse that, you're okay. Now, debit your unearned rent, 4,500, and you had so much left. You subtracted correct and credit rent revenue or. Okay, Morgan, you had next to the last, accrued salaries and wages. All right, debit what? When you owe salaries, you debit what? And credit? When you owe somebody something. Yeah. But in this case, we can put salaries payable if you want to, or wages payable. Okay, and William, you've got fees earned but on bill. Debit
Accounts receivable,
and credit.
fees earned.
All right, folks, I'll run you through a lot of things, okay? And if you've done Cengage, like Miranda has on chapter 3, she already understood adjusted income. So there's no assignments except a test next week. And also, read chapter 4 if you have time. And bring up your Cengage today. So there's plenty of work for you to do if you do it. If you run out of work to do, work on those other problems in the book. Chapter 2 and 3. You'll be careful going on.
So we are gonna do the test next
The
week.
longer you're going to get it, you call it journal in for facts.
Oh, next time on that video. Oh. You should visit it.
Do it for any other.
I'm not, but
What's your workout?
I usually, it just varies for each week, but I make a schedule, so I do like.
Okay. Test will be next Wednesday. Yeah, test.
Oh, very good, thank you very much.
See you later. 8:30, 3 o'clock. I've got 3 classes. Get you a test and give it to you. So can you be up here Tuesday between 8:30 and 3 o'clock?
Cool, man. Peace out.
Are you up early? Come at 8:30 if you want to. You get here later, that's okay.
Tuesday, 8:30.
Yeah.
All right.
That's after, right? Not this two.
No, the fall.
10 days.
I have a question about the chapter 2 that was due tonight.
All right. I may have mentioned that for y'all. Chapter 1, that's the only thing I made you tonight. Well, tomorrow, you got chapter 1.
Well, yeah, not all of it, but I can do one.
All right, let's do them all. Chapter 2, and you have it done by Saturday.
I have like 70 or something.
And you have chapter 3 done by next week.
Yeah.
That's okay.
Okay.
As long
Because I forgot my
As long as you have all of them
laptop.
done by next Wednesday, really. Because the test is, due date was the 6th, the 9th is the 5th. I thought tonight might be a test night, but it's not. So if you got them all finished by next Wednesday, you're in good shape.
Okay, great.
When you all have your first match,
Well, actually Saturday, we have 3, Saturday and Sunday.
here, or?
No. I didn't even check, we have 3 matches, so we're gonna go back.
Back stay overnight somewhere.
Yeah, we leave on Friday.
Okay, so, you got the match.
Yeah, I literally just left my laptop in the student center, so I'm hoping I still have my laptop.
I hope
It was
so.
been a thing, yeah.
Bless your heart.
Yeah.
Well, is it still open?
No, they close at 4, so I couldn't get it, so I'm just hoping that I'll be there tomorrow.
Yeah, but you couldn't get in. But you see, security's here somewhere. Security would walk down there with you.
Where is?
Security? Come here, I'll show you real quick. Let's see, can I see security?